It's a good time to buy. Take this opportunity and start to increase your wealth. This week, we saw a lot of turmoil in the markets. The stock market down substantially after the tariff announcements last week and then shot back up. The stock market's unsure of what's all going on and what they should be focused on. A recent event that I attended called the National Association of Real Estate Brokers Building Black Wealth Tour. I'm just going to kind of give a little bit of my recap and some thoughts that I had from the event. Those are all factors that can lead into a denial of a mortgage. Mortgage companies want to see that you have credit cards and credit and you're using it responsibly. Hello everybody, Ignatius Jackson, CPA, PFS here. I wanted to just make sure everybody knew that I'm both a CPA and a PFS. A CPA is a certified public accountant. You know, we typically do accounting and taxes. Some of us do audit work and review work. We don't do any of that anymore. I'm also a PFS. A PFS is a personal financial specialist. It's a certification that you're able to get through the AICPA, which basically allows you to be an investment manager for people, kind of like having a Series 65 through the SEC. And I can basically have a registered investment advisor office. In this particular case, I decided to partner up with somebody, but we do registered investment advisory services now for people. So through a partner firm that I partnered up with and through a sister company that I have called Ignite Wealth Management LLC. We do those types of services and just wanted to kind of make sure everybody knew about that. And that's one of the reasons why we were starting to talk through some stocks and stuff that happened recently. So just so you know, like I do have quite a bit of knowledge and understanding about all this stuff, even though I'm obviously always required to disclaim the content on these videos that is intended for educational purposes. It doesn't, represent any financial advice, legal advice, accounting advice, all that kind of stuff. Let's go to the Ignite Money Brief. This week, we saw a lot of turmoil in the markets. It was kind of interesting. We had the stock market down substantially after the tariff announcements last week. And then on Tuesday, it shot back up. And then Wednesday and Thursday, it was kind of down again. And then Friday, it was kind of even, I guess. What happened this week is the stock market's unsure of what's all going on and what they should be focused on. Also, I believe there's a lot of manipulation going on with the stock market. Retail investors that don't know exactly what's going on, they're being scared out of the market. And so that's driving some stuff there. And you got institutions they got the Autobots and stuff like that kind of drove the market down as well with the negative news. And so I think you're starting to see that the market's starting to move back up again, okay? Basically in the brief here, what I'm trying to get at is it's a good time to buy. Take this opportunity and start to increase your wealth and buy some stocks, okay? So that's the brief. Let's get on to the topic of the day. So today's topic, a recent event that I attended called the National Association of Real Estate Brokers Building Black Wealth Tour. This is an event that they did all over the country. I attended the one here in Phoenix. I'm just going to kind of give a little bit of my recap and some thoughts that I had from the event. The one here in Phoenix had maybe 20 or 30 people in attendance at the event. The speakers were initially talking a lot about the plight of the Black community, meaning how we have the lowest amount of home ownership, we have the lowest amount of wealth in the country. So some of the things they wanted to touch on that I'll touch on here is that 44% of Black households in the United States own their homes, whereas 73% of white households own their homes. And so there's a gap there, obviously. And then another thing they wanted to point out is that a lot of people end up getting denied for their mortgages that are Black. I think about a 21% denial rate. And, I don't know how much of that is actually true discrimination versus people just not taking care of their stuff. I mean, let's just be real, all right? If you have bad credit scores, if you pay your bills late, if you are constantly using all your credit and the cards are maxed out, or you don't have any credit cards because you're anti-debt, those are all factors that can lead into a denial of a mortgage. Mortgage companies want to see that you have credit cards and credit and you're using it responsibly. They also want to see that you have different types of trade lines. So when I say trade lines, I mean different types of credit lines. Excuse me, let me just, not trade lines, meaning like retail card stores and stuff like that. That's actually negative. But if you have like a couple of credit cards and you had an auto loan on your credit report and you have at least a few years of good activity and seasoning there, you're more than likely going to get a really good loan as long as you're not maxed out on your credit card. On your credit cards, plural, right? There's always a bunch of excuses about why people are getting denied. Some people say that the banks are being racist. Some people are saying that, it's due to our circumstances and how we historically just don't have access to capital and this and that. I mean, some of that may be there, right? but it's a lot less than it used to be. I mean, obviously back in the 60s and 50s and whatnot, before the civil rights era, right, and prior to that, I mean, yes, there was a lot of that stuff going on directly saying that we couldn't do certain things and this and that. Get that, okay? That's not the case anymore. There comes a point where we have to start taking responsibility for our own crap. We have an opportunity, everyone has an opportunity to do better for themselves. The circumstances do not dictate your future. The circumstances can be changed and flipped on the head. I grew up in a family of four, basically, that did not have a lot of money. We didn't have a lot of money. My dad was a welder. My mom worked in like accounts payable at a pool company here in Phoenix. And, you know, we didn't have a ton of money, but we made it and we survived. I was still able to go to college. Granted, I did get some financial aid and scholarships, but I had phenomenal grades in high school. I focused on schoolwork. I focused on making sure that I had my life put together. I set to the side all the other stuff that teenagers typically do in terms of girls and going out and hanging out with friends and party and go, you know, try drugs or drink a lot of alcohol or that stuff, right? I purposely wanted to make sure that I had a better future for myself, and I decided that I was not going to do a lot of that crap. And then in college, same thing. I kind of kept the same tradition going. And I graduated college in 3.5 years with a bachelor's degree. I went into college with credits already because I did a lot of AP courses in high school, which gave me college credit. And then I took pretty much the full load of 18 credit hours every semester and just was like, you know what? I'm not trying to pay for college. So I need to make sure I get everything done in 4 years. I knew I wanted to become a CPA. So I knew I needed to get 150 credit hours. And so I made sure that I was able to basically take all the credits that I needed, pretty much all of them. There was a few that I did end up having to pay for, some graduate level accounting courses that I was not able to take as an undergrad. But, you know, there was a few that I did have to end up paying for. But for the most part, all my stuff was taken care of as an undergrad. And I did it in 3.5 years. And then I spent another, I think, semester, maybe 2 semesters at most, getting a few other credit hours while I started working, and I was able to pay for that stuff while I was working. So people come from bad circumstances, sure. And I will admit, even though we didn't have a whole lot, we were not living in, you know, the inner city ghettos and stuff like that. I get that. I grew up in South Scottsdale in Arizona. There's a difference between North Scottsdale and South Scottsdale. Let's be very clear here. So I don't want people to think, oh, well, you grew up in Scottsdale. Scottsdale's rich. Yeah. We were not in the rich part of Scottsdale. There's a huge difference between South and North Scottsdale. We were not in a super depressed, poverty-ish type area, but we were definitely lower income, and, you know, we didn't have money to do anything and everything that we wanted to do, and we had to budget, and we had to, you know, make sacrifices. And my parents always made sure that whatever we needed for school and anything that was educational, that we got. A lot of that has to do as well with people's upbringing. I mean, if you have parents that are supportive of you and that want you to do better and give you the tools and everything necessary to have a great education and to build your knowledge, then you very well could make your way out of the circumstances that you're in. I learned early on about credit, about making sure that you're not abusing your credit and things like that. I made a few mistakes along the way, like everyone. I mean, a lot of people make mistakes along the way, but I quickly learned how to manage my credit properly. I was able to get a house. I think I was like 25 when I got my first house. My income was still kind of low, so I did actually get my first house using one of those down payment assistance programs that are out there. I actually regret using one of those programs. I should have just paid the money for it. I didn't realize at the time that those programs actually juice up your interest rate and can actually negatively impact you, okay, from the home buying experience. And so they're not exactly the best programs for you. If you have the capital and the ability to put down a 3% or a 5% down payment on the purchase of your house, you should definitely do that instead of doing the down payment assistance programs, because in a lot of cases, they're juicing up those interest rates. And so that down payment assistance that you're getting comes with a little bit of a negative component to it because they consider it to be more risky because you didn't put enough money down on the purchase of the house. That's something that they don't really tell you. You just have to kind of figure it out for yourself. And at the time, I didn't really think about it or know any better. But I quickly refinanced and lowered my interest rate, and I applied some additional money to get the rate that I wanted. There's ways towards homeownership that are available for our community, all right? It's not like people can't get homes if they don't want to get homes. If you want to get a home, you put in the work, you understand the rules, and you do what you need to do to get the home. I say all this because they wanted to focus a lot on some of these things. The event is about building black wealth. Well, I don't really want to know about the fact that there's a wealth gap or a gap between black homeowners and white homeowners. That's not going to help me to build wealth. If you want to have an event about building black wealth, then talk about things that are going to build black wealth. A lot of the early part of the event, I was kind of just sitting there shaking my head. I'm just like, here we go again. This happens at pretty much every event I ever attend where it's talking about building black wealth. It doesn't happen at any other events that I attend about wealth building, but it always happens at events that are specifically structured towards building black wealth. And I go to these events because I want to see what is being talked about to the community, which I am a part of because I'm a black individual, obviously. And I want to always see like what's going on out there. What are we talking about to our people and how are we encouraging them to do better? And so the first like 2 hours, maybe 2.5 hours was all about that kind of stuff. And they really only spent about 30 minutes to an hour roughly talking about stuff that actually matters towards building black wealth. There's 2 speakers, Aaron Howard with Howard Wealth Advisors. I'm going to have this brother on the podcast probably here soon. He was pretty good. He is a registered representative. I usually prefer to have people who are more RIAs or independent advisors. I'm going to have him on the show here. And then there was a lawyer, Yvonne Wilson, I believe is how you say her name. I apologize if I said that wrong if you're listening to this episode. The attorney was talking about estate planning, wills, probate, all that kind of stuff. Super important things that anyone who's building wealth needs to know and understand is how to pass on your legacy and how to make sure that your family doesn't deal with issues upon your passing. Very important conversation. Loved what she's had to say. She knows her stuff based on what she was saying during the presentation. So that's a good person for you to reach out to. Local attorney here in Arizona. Again, Kenna Law Center, PLLC is the business name. And the other speaker, Aaron Howard, talked a lot about the stock market and why right now, despite all the noise that you're hearing on the media, which is what I've been saying for the last week and a half or so, ever since Trump announced his tariff stuff, is just bullcrap. Ignore it. That's essentially what he was saying. And he brought up the data. He brought us some charts, showed you the history of everything and this and that, You can kind of see in the room, people are just like, they don't get it. No matter how much data, how much stuff you bring up to them about investing in the stock market, people, for whatever reason, just don't get it. When I say people, I mean the black community just doesn't quite get it. And for whatever reason, they feel like people are going to take advantage of them. They don't trust Trump. They think the stock market's going to tank. They're looking at all this tariff stuff because it's all over CNN or whatever, MSNBC or whatever show they're talking about, right? Oh, it's going to just drive a tax on people. You got all this crap and all this noise instead of focusing on what really matters the most, which is that the stock market, doesn't matter who the president is, doesn't matter what their policies are, always goes up and to the right on the charts, okay? It always continues to appreciate and go up and to the right on the charts. Why is that? Because company earnings and valuations are always going up and to the right on the chart. If you look at the S&P 500, always going up and to the right on the chart. Because even though you might have a few companies in that S&P 500 that are going to be affected or impacted by the tariffs, that might have decreased earnings potentially, okay? I'm not saying everyone's going to be immune, but you might have some companies. The majority of the companies are going to be just fine. They're going to continue to go up and to the right. Now again, Aaron Howard from Howard Wealth Advisors. His presentation was spot on. He even brought up some of the key things that Trump is trying to do with his tax plan. And you could just see the head shaking, and it's like, those are good things for everyone, okay? Keeping the tax rates low, positive for everyone in the country. Decreasing the corporate tax rate, positive for these corporations that are on the stock market, and it's going to help drive that stuff to go up and to the right. People just don't want to, they can't get over the emotional component of investing and do the smart thing. And that's what keeps poor people poor and rich people rich, okay? Rich people rich, poor people poor. That's exactly what keeps us in this phenomenon where there's a huge wealth gap, is because we're not investing our money. A lot of people in the black community would rather put their money under a mattress, right? You got grandma or in their bra or what. I'm being a little facetious here, but you know what I mean. Like, there's those people out there that just or they want to just buy gold or just do treasuries or savings accounts or this and that. I'm just like, you are substantially decreasing your wealth potential by doing stuff like that, okay? That's not investing. That is not investing. Or they put money into a business that doesn't work and it fails. If your business doesn't survive and you're not making money off of it, that is not investing. Now, if your business is phenomenal and it brings more money and it gives you cash flow to do other stuff, okay, that was a good investment. But a lot of the black businesses that I see out there, not all of them obviously, there's some really good ones out there, but a lot of them are like stuff like t-shirt companies or got some sort of ointments or perfumes, colognes, food type businesses. Those tend to be lower margin items that are not going to give you a huge bang for your buck. You should be striving to have a business where you have employees doing the majority of the work for you. You shouldn't be doing the majority of the work if you want to be a very successful business owner. You should have employees doing the majority of the work, and you're able to profit off of their work and their labor. That's a true business, okay? That's how you build true wealth, is by having a business where you have employees that are doing stuff for you. You're able to charge a premium for those people through your training and experience that you give to them, and they're producing a product or providing a service that allows you to build wealth. That's a legitimate business. A business where it's just you, an employee of one, and no one else, that's not really going to make you super wealthy, generally speaking. It might give you a decent income to live off of, but it's not going to make you super wealthy, okay? So yeah, let's talk about the wealth gap a little bit. White households have an average net worth based on a 2019 survey of consumer finances and the Federal Reserve. White households have an average net worth of $188,000. Black households, $24,000. Hispanic households, $36,000. Asian households, about $95,000. So what does that tell you? White households still have the highest net worth. Asian households are about half the net worth of white households. Hispanic households and black households are just super bad at saving and investing. That's just the nature of the statistics, okay? And so we have to do better. This stock market is a phenomenal opportunity to invest and to put money to work. And I encourage everyone to take advantage of it and to do that. Again, don't plow everything in all at once, do it in some tranches and you'll be fine in the end. As long as you have a 10 or 15, 20 year time horizon, you're gonna be just fine. Now, if you're within 3 to 5 years of retirement, then obviously, yes, we want to maybe look at a slightly different strategy. You don't want to go 100% equities in that situation, but we still want to have some money put into the market to take advantage of what's going to happen in the next, year or 2 years here. So there's certain things that you can do to help that out. That was kind of my recap of this event. Again, this was the National Association of Real Estate Brokers Building Black Wealth Tour. Again, I attended the event here in Phoenix, Arizona, and so I might next year, depending on the timing. This was kind of a bad timing because it was on April 12th, which is a few days before the tax deadline. So if you're listening to this, the National Association of Real Estate Brokers, it would be nice if you could do this event after tax season, and you might have maybe some more financial professionals that can kind of attend and give you some other perspectives and thoughts on some of this stuff, and I think help the community out a lot more, getting them interested in some stuff. And one other thing that I'll mention that was not mentioned during this event: if the focus of this event was on real estate, wealth building, they did not talk not one bit about rental real estate. Not one. It was all about buying your own home. We have lenders and stuff talking about buying your own home. And then it was about stock market and then estate planning. Those are the 3 topics. Not one topic about rental real estate, which is, to me, one of the best ways that you can build wealth. Let's look at why. Not only do you get good rental income that comes through and flows through to you during your ownership of the property, and it pays all the bills of the property ownership, your mortgage, your property taxes, your insurance, if there's utilities, etc., etc., etc. But it's also tax efficient. Generally speaking, tax free, thanks to our friend called depreciation expense. So that income that's flowing through from the rentals is generally tax free. Ding, ding, ding. All right. And then you also get on the back end appreciation. As you're holding it and you're having someone else pay for it, you're getting appreciation on the value of the property that you paid for it initially. So over the long run of 10, 15, 20 years, that is a significant wealth building opportunity because your principal on your mortgage is going down. Although I would recommend that sometimes, especially when there's low interest rates, that you refinance that mortgage and keep it at roughly a 70 to 80% LTV, somewhere on there, for multiple reasons: asset protection and wealth building, okay? Because it allows you to go and buy more rental properties by taking advantage of the equity in your existing rental properties. But not only does it help you to do tax sufficient earnings, it also gives you that appreciation. Was not talked about at all at this event about building black wealth. A lot of these events are always focused on buying your own residence that you live in. That is a cost center. I get it. We want to own our own place. Okay, fine. But at the same time, if you are not able to afford to do that, and it doesn't make sense for you to do that, then why not get into a partnership with a few other people that are in the same situation as you, and you guys can all go ahead and join together and go buy a rental property? You know, get 4 or 5 people together, split the down payment. So you need a higher down payment, obviously, for rental properties. Split that down payment and go buy a rental property. Money, money, money. And then you split the income, you split the earnings, you get the appreciation. You sell that thing in 5 to 10 years, and everybody can either decide to stay in and go do it again, or you just split and go do something else. But that's another way to build wealth. It doesn't always have to be on your own, right? You don't always have to own your own home. There's other ways to build wealth, especially when you're in a market that has high home values and it's hard for people to qualify based on your income. Well, go do something else and invest and make money. It doesn't have to be owning your own home, okay? So I wish there was more about that as well during this event, and I encourage, hopefully some people see this that are with the group and can make some changes for next year. And, you know, anyways, that's just my take on this event that I attended today. Well, thanks everybody for tuning in. Hopefully this was helpful to people, especially hopefully this strikes a nerve or helps someone out in the black community, because I get that there's an issue with the wealth gap. I understand that we need to try to bridge that, and I'm all for it, doing it the right way. We shouldn't be expecting a bunch of handouts, right? Sometimes we need to do things the hard way, the right way, and get it done. That's it. Hope everybody has a good one. Peace.